7729. Anthony Miles, your Christian Reverse Mortgage Answer Man. Let's get into this FlexPay Reverse. This FlexPay Reverse is phenomenal, it's awesome, and you need to understand it. If you're currently making a mortgage payment right now and you're at least 62, and you're thinking about refinancing your home with like Bank of America or Wells Fargo, what you need to realize, and this is extremely important, what you need to realize is every time you make a payment to Wells Fargo and Bank of America, yes, your balance is going to go down. But in 5 years of making those payments, if you needed to stop making those payments, if you needed to lower making those payments, can you call up Wells Fargo or Bank of America and say, hey, can I, stop making the payments, or can I reduce the amount? They're going to laugh at you. No, you can't do that. They'll say, sure, okay, if you want to, but we're going to tack on interest, and we're going to tack on that payment onto the next one. So if you didn't make a $1,500 payment one month, you now have a $3,000 payment the next month, and then a $4,500 payment the payment after that, the month after that. So you're 3 months behind. Now they're going to start foreclosure proceedings. But a FlexPay Reverse allows you to control the monthly payments that are made. It's just like a regular mortgage because you're still making payments. And every payment you make is being applied to that balance, to that mortgage balance. And it's being applied just like it would in a regular mortgage. And it's going down. But what a FlexPay Reverse does, it sets you up for life's emergencies. It properly prepares you for a successful retirement. The number one thing we don't plan out, and the number one thing that happens is that when we're married, we're going to lose that spouse at some point in time. And a lot of times we're going to lose that income that goes with that spouse. And if you don't right now call up and find out what happens if you lose that pension, what happens if you lose that Social Security, what is that amount going to be, and you don't already budget your life accordingly based on that happening, you are in for a nightmare because you're going to get the scare. You're going to get the whole unbelievably sad emotional roller coaster of losing that spouse. But you're setting yourself up for a financial disaster because at that point, those bills didn't go down. When your spouse passes on, the mortgage is still there. The electricity to heat the house, the gas to heat the house, to turn on the lights, whatever, the gas to get in the car, the health bills, all of that is still there. That's still ongoing. And if you're not prepared with how you're going to manage those bills, you might think you can do it now. But if you do not budget it now based on the loss of that spouse and what happens to that income, you're setting yourself up for disaster. So in a regular mortgage, you're making these payments each month. Everything's going great. Everything's going good. Then 5 years down the line, you lose that loved one and you find out, I didn't research like, the Christian Reverse Mortgage Answer Man told me to do. I didn't call them at 1-800-952-PRAY, 1-800-952-7729, and find out about this FlexPay. And all of a sudden, after 5 years, you find out that you lost half of that income. And now you're behind on your mortgage, and you're behind on your other bills, and you don't know what to do. And then you give me a call, or you give somebody a call, and they go, you know what? You don't qualify. You had refinanced, and your mortgage is at a point to where when we put in that equation, you just don't qualify. What are you going to do? What are you going to do then? It's a nightmare. I get those calls every single day, and it's a nightmare, and it's a tearjerker because I'm struggling some way to give these people advice, some way to still help them out, and I can't do it. It's frustrating. But in a FlexPay Reverse, there's no frustration. There's no panic. There's no financial disaster because you were still making payments all that time. But at the 5-year mark, when you lost that loved one, you could completely stop making those payments 100% legally because the reverse was never designed even for a payment. And the FlexPay Reverse is designed to allow you, the homeowner, to control the monthly payments, how much and how often they are paid. If you want to make a $200 payment if you want to make a $500 payment the next month, or if you want to make that zero payment the third month, do so. Still keep that status quo, and that's what I recommend people doing. I recommend that if you do a FlexPay Reverse, you treat it just like your regular mortgage, and you keep with the status quo, and you keep on making those same monthly payments because you will pay down that mortgage just like you would in a regular mortgage, but actually a couple years quicker, more quickly than you would in a regular. But when that emergency comes up, you can stop, or you can cut the payment back. You could say, okay, well, I was making a $1,500 payment, but I've lost my spouse, so I can only afford now a $500 a month payment. That's fine, because that's still going to be applied to that mortgage balance. But you're not getting penalized with extra interest. You're not getting penalized with late fees. If you need to skip a couple months, you can do it. The bottom line is control. Right now, the bank controls you. It's like a puppet, and they've got you on the strings. And they say, okay, payments got to be made, and they wiggle you this way, payments got to be made that way. It's kind of like life and with all people that control our finances. But when you now control that, and you take that control away from the bank, it takes this huge weight lifted off your chest, and it's the difference between night and day. Now you're properly set up for that emergency if it comes up. Car transmission goes, that's going to happen. The roof's going to need to be repaired. Maybe you want to do something to help out your children, or your child got in trouble and they need $10,000, or they didn't get in trouble and they need a down payment for a home. You can do so now because you can change those payments you were making without any penalty whatsoever. The FlexPay Reverse is the most important thing to look into if you're still making mortgage payments and you want to make mortgage payments and you're at least 62 years old, because you would be hurting yourself greatly. I mean, think about it. You can still make the same payment, but you're prepared for that life-altering event that's going to drastically change your life. And you have the ability and the control to say, stop, I need to stop, or I need to cut back, or 1 month I need to do this month, the next month this much. You have that control now. Do you know what it's like taking that control away from the bank and giving it back to you? It's a game changer. It's properly planning for your retirement. The great thing about the FlexPay Reverse is not even just that, what we talked about. The best thing about the FlexPay Reverse is this matching payment that comes about. And we're going to get into that, this matching payment. Anytime you're with a bank right now, okay, I'm with Bank of America, okay? I don't like them the best, but they gave me a great rate. That's who I was with. So I'm making a payment each month. Well, a month that's gone by, 2 months, where I've said, instead of paying that $1,350, I really would have been better just paying $800. It really would have helped me out because some bill came across. Maybe this credit card, maybe it was a collection, maybe it was a hospital bill I was not prepared for. That's what life's about. Things get thrown at you that we are not prepared for. And how you're going to react is the difference. It would have been great. It would have been awesome if, Bank of America would have said, okay, Anthony, instead of sending the $1,350, you can send $800 in that month. That would have been great to do so, because that would have been a game changer for me. For some people, being able to cut it back by $200 would have been a game changer. But also, when you're making these payments to the bank, it gets sent over to the balance, and that's it. It gets sent over to your balance amount, and that's it, which means it disappears. You can't get it back. How many of us have paid a mortgage on the first or second of the month for $1,000 and said, oh gosh, I really wish I would have waited like 10 or 12 days, or I would have rather been late on the payment because I need that $1,000, otherwise my electricity is going to get shut off. Or I needed it for a credit card. I needed to rob Peter to pay Paul. I needed to juggle funds, and I wish I could get that money back. Can you call Bank of America? Maybe they'll send you the $1,000 back. No, they won't. It's like DC. If you send in tax payments or you overpay, they're not sending it back. They're keeping it. You cannot get that money back. And every single one of us has experienced that nightmare of making a payment and not being able to get it back. Yes, it was applied to your mortgage, but you've got to deal with what's in front of you. And whatever money's left over, if it's not enough, then some bill's going to wind up being late. But we're going to talk about in this last segment a way that allows you to take that payment back 100% legally. And that's what the FlexPay Reverse is about. It's about you controlling making that payment, taking it back, and also the bank matching that payment. 1-800-952-PRAY, 1-800-952-7729. This FlexPay Reverse takes a lot of understanding and explanation. So that's why you need to call me, Anthony Miles, your Christian Reverse Mortgage Answer Man. Come out to your home and sit down and explain it piece by piece so you fully understand it. Because that's going to be the difference. As long as you explore these options, you can say, at least I looked at every option possible. Not saying to do it. Sit tight, don't change that dial. We'll be right back for a very important last segment.
1450 WOL.
Part 2.